So glad you could join us on a Tuesday, Crop Progress Tuesday, we like to call it. And we're going to be talking with Brian Hoops right now. Brian happens to be president of Midwest Market Solutions, and he's based in Springfield, Missouri. He joins us right now. And well, Brian, thanks for joining us. And my goodness, everything on the grain side here as we take a look at the market. We had the soybeans hanging on to gains. Corn kind of failed after it attempted to stay firmer here. What's going on with the corn market today?
You know, yesterday we rallied up and filled a gap that we had left, and I think that prompted a little bit of selling pressure. Not a tremendous amount, but just enough to pull us back a couple cents here. We're seeing some spreading as well. Soybeans are being bought here today because of the cold temperatures that are in the forecast. That is going to extend the growing season, and when you extend the growing season into September, a lot of times you'll start talking about the fear of frost, and that has given us a reason, or at least a temporary bounce here in the soybean market, and we're seeing some short covering ahead of Thursday's report as well.
I heard some rumblings, just kind of murmurs, if you will, here about a week ago about the potential for maybe around mid-month or so there could be maybe a frost event in the northern Midwest, but that's so far out you can't really put a whole lot of merit into forecasts that far out there. But is that something that's starting to get a little bit of traction on the trading floor today?
Yeah, I think absolutely. Anything that could hurt the yield here is going to gain some traction and produce some short cover. We've had, a pretty good drop in the soybean market, found some support technically, and then started to bounce. And now the fundamental news has given us a reason to see a little bit more short covering. If we get a rally close to that $10 mark again, we're going to see a tremendous amount of producers selling or hedging, maybe even buying some put options as they go into the harvest. Usually we get a little bit of a rally this time of year going into the Labor Day timeframe, and usually selling that rally pays dividends by the harvest timeframe.
And it's interesting to see the market action the way it is, given the crop condition reports that we got from USDA yesterday. On the national numbers, we actually did see a pickup in the soybean condition. Good to excellent ratings went up 1 point, up to 60%, while the corn went down 1 point, and it's also at 60% good to excellent. But if you look at the soybean condition on that I-80 corridor, boy, you can definitely tell that they had an improvement in the eastern half of the belt. And from Illinois westward, they had a decline in conditions there. So it seems like conditions have improved in the eastern corn belt. But on the other hand, I'm hearing anecdotal stories about maybe the crop growing, as they say in the soybeans, the crop is kind of leggy. It gets tall and bushy, lots of vegetative growth, but the pods are kind of far apart. So that they don't know if that's going to translate into higher yields or not, and that'll be important to watch moving forward. Let's get everybody updated on our current futures trade here, if you don't mind. Let's take a look here at the corn market right now. And currently on the corn, we have the market down 3 cents on December new crop. We're at 3.83 3/4. Meanwhile, on the soybean trade, now you have your September contract up 6.5. We're at 970.5. So trading just the opposite of corn here today, as Brian was mentioning. November now 7 higher at 976 3/4. Now, if we take a look at the wheat trade in Chicago wheat, we're down 6 in September, trading at 457.5 now, and that's only 2 ticks from our low of the day. So keep an eye on that one. Kansas City wheat has September now trading at 460 3/4. That's only 1 tick from its low of the day. We're now down 6, and that's an 11-cent turnaround off its earlier high from last night. So big turnaround in the wheat market now. And looking at the Minneapolis market, we have September just 1.5 higher at 728, and that is 7 cents off its low from last night. Meanwhile, cotton on the new crop December contract up 33 points at 70.88 per pound. We'll come back in just a moment and talk more with Brian Hoops about our livestock trade when we come back. We are talking with Brian Hoops of Midwest Market Solutions, and he is based in Springfield, Missouri. Now, he joins us by Skype right now. And Brian, as we look at our livestock trade, let's go ahead and just dive into the futures here, and then we'll talk about some of the supporting factors here in just a moment. On the live cattle board, we are lower across the board right now after trading higher earlier today. We have August live cattle currently 30 lower at 112.45. That's almost $1 off of our earlier high. The October contract down 65 at 110.47. That one is $1.01 tick off of its high from earlier this morning. We're about 30 cents away from our low of the day. December down 52 at 112.28. Now, if you look at the feeder cattle trade, so far you have the feeders on September down $1.08 at 146.02, even though the corn market is lower. That's interesting. It used to be it would always trade the opposite of that, at least in a lot of cases. October down $1.10 at 145.10. So triple-digit losses being seen here on the feeders. Cash cattle trade yesterday, looking out in the plains on the livestock summary, not much activity from what I understand. Looks like about the only thing going on was some sales in Iowa between 184 and 186 on a dress basis. So that was about the only thing to go by. So why the pressure here, Brian? We had such a negative close yesterday and more today.
Yeah, we're seeing some follow-through selling here in the market. We are hearing some bids in the plains, 115 to 116. Packers trying to use the weakness yesterday and this morning to get some cattle bought, but those are being passed by a lot of the feedlots as they're trying to hold out and hope we get a technical rebound in the market. We can get a little rebound in the cash trade, but it's the market's anticipating we're going to see bigger supplies down the road. Cattle weights were up a couple pounds last week, and even though they're below last year by about 12 pounds, it's still an increase in supplies overall, and that's exactly what the market doesn't want going into the third and the fourth quarters of this year because of our big numbers of cattle that are already coming to market.
And this all goes back to that placements number from a few weeks ago, right?
Yeah, placements numbers are huge. We're getting a lot of the cattle off of grass in the Dakotas and Montana going right into the feedlots. That's going to equate into bigger supplies coming into, that fourth quarter is where we really want to target, November, December, and into January even, where we're going to see a glut of the biggest supplies seasonally or typically. That's when we see the worst prices is into that mid-December timeframe.
All right, Brian, maybe you can explain something. Let's talk about this lean hog market here and see where the futures currently stand, and then we'll talk about some of the background factors here impacting it. On the lean hogs, we are higher. We have August up 35 at 83.75. We got as high as 83.92, kind of knocking on the door of 84 bucks there. October up 60 at 68.72. December up 45 now at 62.95. And yet I look at the cash hog market, we were lower yesterday, and then you look at the pork carcass cutout values from yesterday, and they were up $1.79. We had the loin values up 2.29. Bellies were up 3.79 yesterday. It's like it doesn't totally add up where you have the primal cuts all going sharply higher and the cash market falling apart.
Yeah, it has to come together at some point in time, but these cutout values that you're showing, the carcass values being higher, that's what's really driving prices. If you look at the August contract, it's holding a discount to the lean hog index. That index is around $87, and August goes off the board next Monday. It needs to align itself to that index, and so it's forced to rally up into that $86 to $87 range. It's pulling some of those deferred contracts higher as well, and you look at October, December, in the mid-60s. That's a huge discount, over $25 to that index. And when October becomes the lead contract, it's holding too big of a discount. You cannot sell that discount, and a lot of the traders will not do it until it gets closer to where the index is.
All right, thanks for explaining that. Brian Hoops, the president of Midwest Market Solutions in Springfield, Missouri. Good to visit with Brian all the time. So a lot going on in the hog trade.
All right, thanks for keeping us posted, Marlon.